Hi and Assalamualaikum. Our group will be presenting the global issues in capital market and our topic is the challenges in Asian bond market. Now, let's start with the introduction. First and foremost, bond market growth from a macroeconomic viewpoint is not only significantly related with a real GDP per capita, but it also improves economic stability. Bond market development is vital for government's finance, which was desperately needed during the Asian crisis. Bond market development provides chances for Asian nations to build a broader choice of financial instruments to promote growth and prosperity. It lays the groundwork for the growth of securitizations, which will, among the other things, allow banks to manage non-performing loans.
For the first issue is size trap. Asian bond markets are less established than those in the United States and other developed countries. Asian bond markets are small and underdeveloped, and the country's economies have typically relied on financing. Small market size causes illiquidity, which discourages issuance and reinforces the market's small size. Small economies in Asia have difficulty creating bond markets because liquid securities markets have a minimum effective scale. Asian nations also lack institutions that support the market, such as creditors' rights and effective contract enforcement.
Hi, so for the next issue is legal system and asymmetric information, which is asymmetric information can occur in any situation involving a borrower and a lender when the borrower fails to disclose negative information about their real financial state. Then the borrower may simply fail to anticipate a worst case scenario such as a job loss or an anticipated expense. Then lack of legal institution might stymie bond market development while facilitating bank funding.
Next is irregular benchmark bond issuance. There are not enough high quality significant frequent bond sale which hinder the market expansion. Too many government bonds can crowd out the private borrowing while too few can leave the market without a yield curve. Riskier bonds like corporate debt can be valued appropriately without a risk-free government yield curve. Evidence from developed countries show that a large and liquid government bond market help a strong corporate debt market grow.
In major bond markets, the investor base for bond market is generally well diversified with banks, mutual fund and contractual savings institutions such as pension funds and insurance companies providing the investor base for the bond market. Since many of these financial institutions are undeveloped in many East Asia countries, the investor base for the bond market is less diversified. Although there are significant differences across countries in this respect. For example, Malaysia is also highly dependent on employee pension funds for bond absorption, while the Philippines depends more on private commercial banks. Indonesia and Thailand rely more on pension fund, with Indonesia having some participation by securities fund as well.
The goals of the study is to inspect the evolution and challenges of Asian bond markets following the Asian financial crisis. The aim is to prevent the crisis from reoccurring and also to provide an efficient financial intermediation for equitable economic growth. Prior to the crisis, Asian firms were excessively dependent on bank loans from within and beyond their own nations. It was thought that the growth of bond markets would address this problem and that the financial system would become more stable.
Asian countries struggle with issues relating to market size and an undeveloped bond market. The size of the corporation has a significant impact on the bond rating. Each of the main rating agencies assign a bond when it is issued a credit rating based on how creditworthy the debt is. This rating takes into account several aspects of the issuer, such as the condition of its finance, its capacity to make debt payments, and strength of economies. As a result, the greater the size of the company, the potential to diversify non-systematic risk is also greater, so that the risk of the company's bond decrease and increase the bond rating.
So for the next point of view is control strategies for information asymmetric problem. One of the fundamental obstacles for building a bond market in the context of existing bank-based financial system is reducing asymmetric information, which reduce the complexity of insolvency and bankruptcy proceeding, which will grow exponentially with the number of lenders. Transparent and standardized bankruptcy procedures such as rule establishing a standing committee of representatives from various classes of creditors will enable relevant parties to open multilateral lines of communication, reduce information asymmetry among stakeholders, and act quickly and efficiently in the event of default. According to economists who research asymmetric information, such scenario might constitute a moral hazard to one participant in a transaction. When a seller or buyer knows how or reasonably think that the genuine but unreported danger is involved in a transaction, a moral hazard exists.
We can take a look at the US Treasury security yield curve and data as a benchmark. One thing that many of them have in common is that the foreigner take a part in them. Only 3 of the major Asian markets don't let people who don't live there trade the government debt. Just 3 markets, which is China, India and Malaysia, which make it hard for their yield curve to be useful or informative by not letting foreign traders buy and sell the government bond, which is China, India, or making it difficult for them to do so, which is Malaysia. When you look at how liquid this market are, however, there is a wider range of price. The market turnover, which is a simple way to measure how liquid they are, range from 44 in Hong Kong and 0.5 in Philippines, even though the annual turnover of the most liquid market is about the same as the US Treasury market, which is the 48. The turnover of the second most liquid Asian market, Singapore, is only 10% of that in the US market, and the turnover of the least liquid market is only 1% of that.
For the issue of investor base for the bond market is less diversified, diversity of the investor base is needed. By encouraging the growth of investor with a variety of investing aims and approaches, the investor base is intended to be widened. By providing trading possibilities, this will increase market liquidity. It will also lessen market volatility by enabling holders of bonds with the greatest capacity to withstand various investment risks to hold those bonds. The goal of expanding investor base is encourage the development of investors that have different investment objectives and employ a range of investment strategies.
In conclusion, the challenges for continued growth of Asian bond markets can be summarized such as: firstly, it is critical to develop both primary and secondary marketplaces. Secondly, the number of corporate bond issuers must be increased. A special emphasis should be placed on the supply of money for infrastructure financing, SME financing, and housing loans. Finally, the institutional investor must be nurtured. Investor growth is necessary for bond market development. And lastly, the regional financial integration should be encouraged. An integration advancement brings numerous benefits. As a result, a steady improvement is preferable. That's all from us. Thank you.